All right, let's bring in Fundstrat Global Advisors co-founder, former J.P. Morgan chief equity strategist, Tom Lee. You know all about the banks and all the stuff. Tom, great to see you.
Yeah, thanks for having me.
Okay, so we have a rate hike. We're at the 1.5 to 1.75% Fed, still remarkably low.
Yep.
But good news for the financial sector in that sense.
Yes, I think markets generally want a normalization. I think rates are rising for the right reasons, and I think even as you mentioned, the general nils, the idea that inflation is creeping up in the economy, it's important for rates to keep up.
But you know what doesn't seem to bother the Fed, according to Jerome Powell. We talked about, yes, the underlying growth is strong, unemployment down, and yet inflation has remained stubbornly tepid. What's the explanation for that?
Yeah, I think it's puzzled a lot of economists over the past few years, is that inflation's really well anchored, and core is still at 1.7. With unemployment where it is, you'd think it would be a lot higher. It's actually good news because it does mean the Fed doesn't have to move quickly. But as you know, progressively, industries are feeling wage pressures, right? So not every industry has tight labor markets, but when you look at the service sector, a lot of these companies have to raise wages.
They do, and if you look at the unemployment forecast from the Fed, this year 3.8, next year 3.6, 2020 3.6, that's a very tight market sector, isn't it? A labor market sector.
Yeah, it's almost miraculous,
almost
isn't it?
Unbelievable.
Yeah.
And of course, you hear from a lot of companies that just don't have enough qualified people to hire. They say the labor isn't there.
Yeah, that's right. I mean, one of the issues has been participation rates have been really low. How much of it's due to retiring boomers versus disability or people who've lost skills because of the recession? We don't know. But it has been one of these things that has kept unemployment rates low.
The strength in the economy, how much has that come, do you think, from the tax reform we had? How much has that helped? And certainly for corporations who apparently are a lot more confident to invest in capital expenditures and to hire more and expand everything you want in a healthy economy. How much is that down to tax reform, do you think?
Well, the economy was doing quite well without the tax reform, and confidence among CEOs and individuals had really recovered. This tax plan is going to add to the growth rate, so it's almost good on top of good. Hopefully it's not too good.
Too good. In other words, you don't want it to overheat.
Yes.
Which brings me to my next question. We've talked about this a lot. Trade war. What about tariffs? Are you concerned, as some of the Fed members are apparently, that could really start to have an impact on the economy if we go down that road? Yeah,
our clients are increasingly talking about that. So it is clearly in the minds of investors. And as you can see, the markets reacted when Powell was asked about those questions. So it's clearly a source of uncertainty. Obviously, some clarity would help.
Do you think the statement from the Fed today gives some sort of comfort to investors that, look, the underlying picture here is pretty rosy?
I think the markets are now getting a good sense for the character and the kind of communication we can expect from the Fed. And you're right. There's some visibility on a future path, and I think that path will allow people to allocate capital. So, yes.
Does this help reduce the volatility a little on the market?
Yes, I think that we didn't get an extreme either way, so I think we're still at middle of the road. That's why we saw some of the gains given back in the market. But yeah, I think this sort of middle of the road and being data dependent is something markets are very comfortable with.
GDP, we'd love to see 3-4% growth, maybe getting ahead of ourselves a little bit, but not out of the question.
Yeah, I mean, especially on real, I think that's possible. And I think what's interesting is, inflation should be picking up. So nominal growth really picks up. And that's what really helps corporate profit growth.
About global economy, we've heard that not only has things improved here, but it has improved around the world, which helps everybody rise at the same time. Is that still the case?
Yeah, it does feel like we're synchronized global growth, which is positive. I think there's probably greater questions if it's later cycle outside the U.S., but U.S. does feel mid-cycle. I
want to ask you about banks. You have have a lot of experience in banks. Mr. Powell was asked about financial stability vulnerabilities, which is a great word. Are the banks okay, basically, is what we're saying. He said he's a big fan of stress tests, doesn't really have a set idea on how often we should have these stress tests, but he's certainly very aware of that. I would imagine that now, given everything we've been through, that the financial community looks very stable.
That's right. The quality of the balance sheets of the banks today is very strong, especially compared to a decade ago. There's a lot less leverage. There's much better quality capital. Maybe there's more questions outside the U.S., which is out of the Fed's purview. Anyways.
Exactly. Tom, thank you so much. I threw a bunch of questions at you. Appreciate your input.